Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 4th of January, 2022. It's odd saying 2022. This is episode number 2144. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick mic check from everybody. Just let me know where I am. Too hot, too cold, too shallow, too quiet, whatever it is. Let me know where we stand audio wise. This morning, coming in here, we have another day of mild risk on. We are seeing a lift in the S&Ps above 4,800. The S&Ps pushed to 4807.50 this morning, which was expected given yesterday's close. Yesterday's trade, it was actually relatively aggressive. We had pretty good. We had about 1.07 million contracts traded in the RTH session. You can hear that I'm losing my voice, but which is great because tomorrow I'm doing the first of the year show with Anthony Crudelli, which I need to link in here. It's a live stream, but we'll get it fixed before then. But we're certainly pushing higher. The Nasdaq's higher than where it was yesterday. Overall, the market is in a risk-on stance. It is not being scared away by the just insanely high numbers of infections by the Omicron variant of the COVID virus. And so that coupled with some good unemployment news out of Germany, good inflation news out of France, the market's taking a pop higher. So I'm going to go over the bigger picture today just for a little bit, but we see Europe really pushing higher, up 105 basis points on the Euro Stoxx 50, which represent 50 of the largest stocks across the Eurozone. And the DAX is up 89 basis points. Crude is also popping higher on news out of OPEC from Q1 2022 onwards. The oil market will be in oversupply. OPEC Plus and JMMC are saying, but crude is responding to the positive side. Crude had a bit of a V bottom yesterday. And is looking a little bit bullish. OPEC Plus agrees to maintain current strategy with 400,000 barrels per day rise in oil output in February. So that's what's going on over there. The cryptos are holding steady. Another positive day versus yesterday. In the futures, the S&P, we have 161,000 contracts traded. We have pretty good range, 26.5 points so far. Point of control of 47.95. We're above the 4,800 level with the overnight inventory being 72% long, meaning 72% of the volume has occurred above settlement. Today, what's on deck? We have a couple of high-tier numbers, 3-star numbers. ISM manufacturing PMI at 10, and also the JOLTS job openings number, which is at a record high. At 10 as well. And then at 4:30, just a half hour after the cash close, we get the API crude oil stocks. Here's the bigger picture. Let me clear my throat. Here's the bigger picture. So every box here represents a week. The change in color of boxes, so you can see this is changing to a light gray from the dark gray. The change in color is representing month on month, and it helps me track this chart by itself, helps me track the daily time framing, and in auction market theory, time framing describes trend. So in an uptrend, we need to see equal or higher lows. The market should not be capable of making lower lows. We don't really put so much stock in the highs being higher. We just want the lows to be higher for an uptrend. For a downtrend, we want the highs to be lower. We don't care if it makes a lower low. It's not as significant. A lot of people say higher high, higher low, lower high, lower low. but we want to see the market come back and not be able to take out that high for the downtrend or the one-time framing down to continue. And we're tracking one-time framing on a daily, weekly, and monthly basis. And this is what this does. Each one of these boxes is a week, each change in color is a month, and each bar is a day. And so I'm seeing all of that happening at the same time. So we could see that last month, December versus November, we actually one-time framed. We stopped the one-time framing up, which had been occurring for a while, and went into neutral on the monthly. On the weekly, we started one-time framing up last week. We had a higher high. We had a higher low, and we broke the prior high after going neutral for a couple weeks through December. And we're currently on the daily. We are in a neutral posture. And this is why it's been kind of back and forth, choppy, noisy. In fact, I am looking to quantify what that is. And so I created this chart, which I posted as part of my homework to Convergent Trading members. This is the profile. This is the profile imbalance in this region. And with this profile, this is a day session only profile, RTH profile. You can see where the close is. The close is around 87, 86, something like that. And where we are in the overall picture. So we've pushed a high just a couple days before that on Thursday or something like that. And then, and we could see that there's an excess on the low. So down here, blue's not a good color for this, or yellow's not a good color for this. Let's try something darker. So you could see the test down on Christmas Eve was met with some pretty strong buying, and then that strong buying pushed us into what is the current balance up here, and we've been in this very wide balance area since then. So this is using market profile. This is not volume profiling, although the volume profile shows something similar. I go to market profiling for bigger picture because I don't need to load so much data, and it's a little smoother, so to speak. So each one of these dots or blocks you see here represents a 30-minute time period, and that's called a TPO. And then they're overlaid on each other, so we can see where the market spent the most time. In a bigger time frame, the more time it spends in an area, the more volume it's likely to have in that area. And what is the takeaway here is that from way down here all the way up to the 47.95 or so, there's just a very elongated, immature, developing balance. And we've kind of been stuck in this balance, and that's the lack of interest. This is why that and having a newborn 2 weeks ago or 3 weeks ago is the reason I'm not really engaging with the market at the end of the year and all that stuff. So to me, it's important to know that when it's in this range, or if it comes back, it's above it currently. The market's trading at 48.02, so it's up here somewhere. If it falls back below 47.95, I know that now it's coming back into balance, and it's likely to see these whipsawy move, like kind of like what we saw in the NASDAQ today, and we've seen in the S&P yesterday, these big pushes down, then a big push in the opposite direction. In balance, when the market is in balance, when the market's in balance in this range, there's incentive for both sides to take positions on the extremes. So that's called the extremes in trading, or outside in trading. And it's tougher to read, in my opinion. So I just wanted to share that. As it says here, the value area for this balance is 47.92 down to 47.67. It is important to keep an eye on the big picture here. MC point of control 47.70. That's the MC VPOC, which is volume based, and then the time based, or the market profile based, TPO based, is 47.76. So anytime we're in that area, we're in this balance, and we are likely to chop around. And I say the bottom line, unless we move away from this area, we're likely to continue to see two-way activity until this profile matures. So I just want to make sure you know that we're breaking away from this zone. This morning, we're breaking away from it, but you could see yesterday we really regurgitated and traded again and again and again that 47.77, 47.82 area, and now we are just above. Below us, just to keep things in check, below us right here, 33 to 31, which is a major stock zone below, that's this area down here, and then below that, that's not a straight line, is the 05 area. That's 100 points away, 47.05. These are the key support areas below us. And currently this morning, we're looking at 4,800. We want to see, the first thing today, we want to see how the market responds to 4,800. How does it come down and poke in to 4,800, into last week's profile, inside of the prior week, and bounce right off? Does it open and run away, which gives us a gap and go situation, which is quite initiative. So we want to get long. And in this situation, our first target is 48.15, the measured move. And then above there are some gaps above there, or some big areas above there where I have no levels or extensions. But we want to see this morning, we're opening out of range of 48.03 with a high of 47.99.75. What do we do? Do we poke in? Do we fall in? If we fall in and we can't get out, we can't get back above 4,800, then 47.82, 47.77 become key targets. So we know that we have, we may have 5 points of risk, but we're looking for about 25 points of gain, and that's a pretty good return on risk, in my opinion. So that's where we stand. The range has fallen. It picked up a little bit, but the range has fallen. But again, and also the volume has fallen. But again, this is clouded by the fact that we were on the end of year holiday. Looking at yesterday, let's remove some of these lines here. Looking at yesterday, this is what I was talking about. This is the kind of action we would see. This was scenario 2 as outlined yesterday. Scenario 2 was looking for 58, but if you look at the master levels, you'll see that we had a single print at 47.47, and we went down to 47.50, 47.50. And this is the kind of action I'm talking about when we are in balance. This really deep kind of tests and bounces and tests the other way. Yesterday, this high, this close was very much bullish. And I talked about this in my notes last night for today's homework. I talked about the fact that I'm expecting it. Actually, this was right at the close. I said the way this closed, it took out the IB stat in the last few minutes, and the way it closed, it is very likely to continue to drift up through that 4,800, and it did. It went to 48.07. So what we saw yesterday is a very clear test down into the single prints from last week, from the 27th. It held those single prints. It consolidated in the middle. And then as soon as it started to push higher, it was longs only. And with the close, this is one of those occasions I have rules that don't allow me to hold a position overnight. But this is one of those cases where the continuation higher was a very high probability, and it would have merited holding a position long. I don't do that, but this is kind of a situation where the market has clearly gone down, tested, found buyers, and has bounced back up. So the only way to look at this is to be long into the overnight session, in my opinion. Looking at Delta, pretty good lifting. In fact, yesterday when I turned on my flow, indicator here, you could see that this run up had really good participation. What these dots are doing is they're comparing the order flow versus prior action, and they indicate how much stronger it is than prior action. So this, with that, the point I'm making here, and I'm not going to get into how those dots are created and stuff, but what this is indicating, and same as seen in the delta, is that there was some really directed effort at lifting the market, and this is an indicative, another piece of information that's indicative of it continuing to float higher and push through the balance area discussed earlier on that market profile. Here's what happened. We poked above the IB, pulled back to the point of control, really right against the point of control from yesterday, and then off to the races it goes. Europe opens, the numbers come out of Germany, it pops even higher, and then we come back to the SOC on the numbers from Germany, and we're holding sideways. We have a multi-distribution profile, one distribution below, one distribution above, and we have a low volume node right against yesterday's high of 87.25, down up into 47.90. So 87 to 90 is an area I'd like to watch this morning. This is looking a whole lot like a gap and go situation. We've built an overnight profile on top of where we were last Thursday, that distribution that we had a balance before the market sold off last Thursday, and we're holding steady here. The market is opening out of balance, so I expect it to be relatively aggressive versus yesterday, where I expected it to just kind of grind around given how it was opening. That's the overview. Let's take a look at what's expected for today so we can all run off and get ready for trading. Master levels, stock zones turned on. So levels above here are quite sparse for me. I will need to run some new projections, but we are trading right up here at 48.0250. Yesterday's high, 47.87.25 in the day session, 47.91.25 in the overnight session. So we're opening in a gap. I'm expecting a little bit of responsive selling into the overnight point of control. I expect it to poke into the 4,800, push into this 99 area from last week, this big stock zone right here. And then I'm looking for a gap and go kind of situation that gets us up to 15 from 99. However, this isn't the type of day where we would expect 15 points of range. So if it does test a 15, really there's no reason to be short, in my opinion. It's likely to consolidate there and then start squeezing towards the 40 up into new all-time highs. As I said, there's a lot of money still sitting on the sidelines and needing to be deployed. I expect it to be deployed, getting long. The market is not being scared off by Omicron, and it's not being scared off by inflation as indicated by the Treasury market. So I'm expecting money to just chase the highest profitability, which is in equities, and that's what this index represents. So I expect us to run off. In case we don't, which makes for a more interesting trade, an open auction that squeezes higher, gets an impulse down like we saw yesterday, gets us back into the overnight point of control, consolidate, tests into yesterday's high. If it attempts to pull back and take out the 800, the double O, and fails to do so, then I'm looking short into settlement, which is at 85.86. Okay, that becomes the target from approximately 4,800. And then if it's not able to hold that, then really there's a lot of damage that can occur here. The next balance area is 70, 47.70. Using volume, the MC point of control is 47.70, and then the market's back in equilibrium. So you have a run of about 30 points if it falls back below the double O and is not able to get back above it and is back in last week's range. I expect it to test the MC point of control at 70, and that would be the other trade. These are the two structured trades, the two key structured trades for the day. My job now is to look and see, is not to have a bias or judgment, but to look and see how the market's responding. Please make sure you're not trading off of order flow alone. If you're not profitable and you're focused on order flow, or if you're not profitable and you're focusing on like a 200 tick chart, or I believe this is a very hard way to have a sustainable return on your time as a trader. Create, just like I'm doing here, I'm using a half-hour chart or something big. Create your bias, keep a map of what's going on, and then look to your order flow, look to your short-term charts to engage in the direction of the bigger picture. I mean, if it's clearly, if you see it on the bigger picture, failing to continue higher and it starts to roll over, then it's hard to locate a trade within that. It's possible with a wide stop, but it's hard to locate that within a higher time frame, and that's where you go to your smaller time frame. What I see is people go online and follow certain gurus or whatever, and they're looking at, the software that gives you these minute order flow, whatever, and they're trying to trade off of that. Keep your mind on the big picture, trade off of the smaller picture. This is much like a hunter does not look through their rifle scope to survey their prey, to survey the territory. You don't do that. You put your rifle down, you look around, you may get some binoculars and look the distance. That's your bigger picture chart. Once you've located your prey that you're stalking, then you pull up your scope, and that is the short-term chart. What I'm finding is everybody's running around the map with their scope on the whole time and wondering why they're ineffective as hunters. And that's just an analogy of what we're looking at here. Make sure you're taking it all in, the panorama, locate your area that you want to do business in, and then hone in on that using order flow, short-term trigger charts, whatever you want. That's my advice to you to save you a lot of frustration this year. If your plan does not have that aspect in it, I suggest you start incorporating that, or at least consider it. Good luck, and I'll catch you tomorrow morning. Take care.